Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to discuss the worst case scenario for the total market capitalization of the entire cryptocurrency asset class in terms of finding a major bottom. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Now, I should say that a worst case scenario does not necessarily mean it is the most likely scenario. It does not mean that it has to play out. And also, my idea for a worst case scenario could even be optimistic compared to other people's worst case scenario. But we put out videos on this in the past, and I wanted to provide a general update to it. Remember, this is not financial advice. This is just my unfiltered opinion on the market, okay? So let's go ahead and jump in. I hope you guys enjoy the content. It's going to be a longer video, but I do like just putting everything into one video as much as I can so that I can at least I can form my thesis just a little bit better. So, over the last several months, obviously, the last half year or the entire year really has been a fairly lackluster year for the cryptocurrency asset class. And back in February, we were talking about the risks associated with crypto and how we could compare it to the dot-com bubble. And in that video, this was back in February, we called it the crypto bull, understanding the risks with cryptocurrency. The reason we called it that is because back in the early 2000s, we also had a dot-com bull where a lot of dot-com companies essentially promoted, put ads in the Super Bowl, and therefore it was dubbed the crypto bull or the dot-com bull. And the reason why I wanted to make that comparison is because we've also saw back early 2022, we had the crypto bowl where a lot of different cryptocurrency ads were going up. And essentially the Super Bowl was taken over by cryptocurrency businesses. So in this video, we looked at the parallels between the dot-com bubble and the crypto bubble. One of the interesting things in this video that we talked about was the dot-com lesson, where the entire asset class peaked at approximately 3 trillion. You can see here the combined market values of the 280 stocks. This is making up the majority of the tech stocks, peaked at approximately 2.948 trillion. Now, what's interesting about that is that this asset class, crypto, also peaked at around that same level at just below $3 trillion. So we talked about that in this video. And we looked at a lot of the parallels between where we were back then, the total market cap, it was at 1.828 trillion. And we were discussing the idea, well, if it drops the same amount, then we're looking at several hundred billion in terms of a bottom. We actually followed up this video in February. We followed up this video where we talked about that downward trajectory and the risks associated with it with this video in May, where we talked about, again, where is the crypto bottom? What is the worst case scenario? Of course, that was when Bitcoin was at closer to 30K and Ethereum was at around $2,000. But now I want to provide an update because obviously a lot has changed since then. And I want to just systematically go through where are we today, and if the worst case scenario were in fact to play out, where would it put the asset class? Now, remember, the first place we should start, I think, is just looking back at the dot-com bubble in the year 2000. And you can see that this bubble had several bounces all the way down to the bottom. I mean, it did. And we're actually going to compare these two to what we were experiencing in this bear market. You can see back in the early phases of the bear market for the dot-com tech stocks, we saw a bounce to the tune of approximately 40% or so, right? 40% plus or minus a couple percent. We then saw another significant bounce over here in April 2001, where we went up about 50%. And then we saw a third and final major bounce where it went up closer to around 60%. So we had a 40% bounce, right? A 50% bounce, and a 60% bounce. And every single one of these bounces was not the bottom, okay? And it's crazy, that how long they had to deal with this back then. I mean, I was not an investor back then, but this bear market lasted for over 2 years. I mean, this bear market lasted over 2 years. And you had a 40% bounce, a 50% bounce, and a 60% bounce. And every single one of those bounces, the bottom was not yet in. So by the time they actually hit the bottom, I imagine most people did not believe that this was actually going to go up for a while. Of course, we know the housing market crashed, we came straight back down, but we actually, just then recovered. We didn't put in a new low over here, and then we went on this massive bull run. Okay, so the question is crypto experiencing something similar? And if it were to continue to play out like the dot-com bubble did, where would it put the asset class? And of course, we talked about that in this video, in the worst case scenario video, where we talked about, the drawdown, if it goes down 80%, 85%, where would that put everything? So I want to do that again. Remember, the entire dot-com bubble here dropped to the tune of approximately 83 to 84%. And every single step of the way, we had a 40% bounce, a 50% bounce, and a 60% bounce. Now we're going to compare that to the total cryptocurrency market capitalization. So, same thing. So far, the asset class from the peak is down about 74 to 75%, which is fairly far down compared to where we were at the peak. And you might say, well, there's not a huge difference between being 74% down and being 84% down. But my friends, there is a big difference between those two numbers. For instance, right now, the asset class is at 1.02 trillion. If we were to go down, say 84% down, that's getting all the way down to like 469 billion. That is a big difference from where we are today and where we could go if we were to see the same type of bear market that the dot-com bubble saw 20 years ago, okay? So I also do imagine that every step of the way, everyone called this the bottom, right? Every single step of the way, and then it ended up not being the case until finally we did put in a bottom after the entire asset class was down to the tune of 83 to 84%. So are there any similarities between this move, this bear market, and the one we saw over here? Remember, 40%, 50%, and 60%. Well, let's check. We've clearly had two major rallies since this bear market began, if you ignore this one, okay? So I understand there is a desire to measure the bear market as starting from April. I've even spoken about that a lot in my videos, that as from a technical perspective, in terms of a lot of other indicators, it seems like April 2021 was a more technical top. But we're just going to compare it at this point early on in the video. We're just going to be looking at the actual price top, not the more technical top that occurred over here. The first bounce that occurred in early 2022 started in January, late January. And how much do you think it bounced, right? How much do you think it bounced? Well, it bounced about 44% or so. Not that dissimilar from this bounce over here that was about 43%. So about a 40% bounce off of that first bottom, okay? So this was bottom number one, right? This was number two, this was number three, and this was number four, okay? So going back over here, you could argue that this was the first one, this was the second one. This, again, is the worst case scenario. It does not mean it has to play out. I just want people to understand the risk. We talked about it back then in early 2022. We're going to talk about it now. We're probably going to talk about it again in 3 to 6 months, okay? So I just want you to understand what the risk is. How far do you think this bounce has gone up? From this wick to where we've gone so far, it's about a 52% bounce. So arguably, you could say, all right, well, we had a 40% bounce off this first bottom, a 50% bounce off the second one. It doesn't even mean that this bounce is over, right? We could continue to go up. This bounce went up about 51% or so on back then the dot-com bubble. And again, this one so far has been about 51%. It's a fairly similar move in terms of how far down it has gone in terms of percent. So it's a 50% bounce. Now, what's interesting is that the third bottom here was actually not that much worse than the second one. Okay, I mean, like, it didn't go down that much more. I think it was about 20% drop, another 20% drop. No, not even. It was like a 17 to 18% drop. So let us suppose, what if the bottom were to fall out and we were to go down another 18%? Where would that put the asset class? Well, 18% from this wick right here would get crypto, the entire asset class, down to about 634 billion. For Bitcoin, a drop of 17 to 18% from that wick would put it actually at around 14 to 15,000. Close to 15,000 or so. Now, what's interesting with this, though, is that I really do think that if the bottom is not in, then Bitcoin is much closer to a bottom than a lot of the rest of the altcoins. Okay, that is what I think. I've been a very strong bull on the Bitcoin dominance for the entirety of this year. Clearly, recently, it's been going down. This is where we started 2022, right here, where the dominance was, right around 39 to 40%, pretty close to the current levels that we're at. Basically, for the entire year, I've speculated that the dominance of Bitcoin should go up a lot. It hasn't done that yet, right? I mean, it did go up, but it gave it all back. Okay, so I do think that if the asset class has to continue to have not if it has to have two more drops, just like the dot-com bubble did, then I do think that a lot of those percentages are going to come from the altcoin market and less, not as much of it would come from Bitcoin. I do think Bitcoin could easily put in a lower low, but I don't think that it would, the percentages that you might see on here, I don't necessarily think that I would all be reflected in Bitcoin. I think a lot of it would be reflected in the altcoin market, as opposed to Bitcoin, even though I do think Bitcoin would go down if there were another major leg down by the entire asset class as a whole. So going back to that, if we did have another 17 to 18% down, what's interesting, and this is where it could get really difficult, and we're going to tie this into a ton of different charts. If Bitcoin, or if the asset class saw a 20% drop from the bottom that we just saw, and let's say it came down to here and then bounced, a 60% bounce, which is where it went back then, the dot-com bubble, would put the asset class back at around a $900 to $1 trillion market cap. So about where we currently are. This would be very difficult. And the reason why this would be very difficult is because there would be a lot of reason to assume that this is the bottom if we do have a lower low. Okay, I know a lot of people think that we've already hit a bottom. A lot of people think that Bitcoin has already hit a bottom. We put out a whole video not that long ago discussing the points for the bulls and the points for the bears, and it seemed like it was about 50-50. I'll show you some of those charts in this video. But if we do go form a lower low, then at that point, I imagine that most of the charts would say the bottom is in, definitively, based on historical data. It would say, look, the bottom is in based on what we've previously seen. And so that's why if we do get a 60% bounce off a future bottom, let's say it happens at the end of the year, a lot of people would assume that's the bottom. And to some degree, I would probably assume that's the bottom. I'm not going to lie. I mean, a lot of the charts would say, look, it's the bottom. If history is any indication, this is where the bottom would in fact be. But we should always remember that there is no sure thing with regards to investing. There is always a risk that you're taking on, no matter how confident you are that something will play out. And if it were to play out the same way as the dot-com bubble, then that next low, you would still see from that point another 30% drop, 27% drop to the actual bottom, okay? So what that means is if that were to play out, then from this bottom here at around 634 billion, another 27% drop would put the asset class at just under 500 billion for the entire asset class. And if you remember back in this video over here in the worst case scenario, we talked about that. We basically said, well, it would put the asset class at around 500 billion. I don't know exactly where I showed it. But it's somewhere in this video where we sort of measured it out. Yeah, like you can see right here, around 500 billion. This would be an 83 to 84% drop. If you take this entire move here down to the bottom, it was about an 83 to 84% drop. If you go up to the top here to the bottom, it was about an 8. It would get you to around an 83% drop or so to go down to around that 500 billion mark, plus or minus 100 billion or so, right? What's 100 billion among friends? So then the question becomes, well, is this a likely scenario? Listen, I think it's the worst case scenario. I don't think it has to play out, but I also think that it's silly not to assume that it can happen, right? It could happen. And I think you need to be preparing for it in case it does. The way you prepare for it, I mean, this is not financial advice, but the way I would prepare for it is to have some money in, just in case, right? If it happens. If it doesn't happen, then, my opinion would better to be safe than sorry and have the cash just in case. But again, you have to come up with your own conclusion. This would be what I would consider to be the worst case scenario. Now, looking at Bitcoin, how would that affect things if Bitcoin has to go put in a lower low? Well, if Bitcoin were to put in a lower low below 17.5K, would that make sense from a market cycle perspective? Or does the evidence suggest that the bottom is already in? Well, I would encourage you to go watch the video that I put out a week or two ago where I systematically went through like 20 different indicators, and half of them were bullish, and half of them said half of them said the bottom's in, the other half said the bottom's not in, right? So that's the reason why there's so many bulls, that's the reason why there's so many bears. Okay? Everyone's picked their favorite indicators, and those are the ones that they're sort of holding on to. But if you go look at some of these charts, we'll just quickly look at a couple of them. One of the things that you'll notice from a market cycle perspective, in terms of, say, the return on investment from the market cycle peak, okay, I want to pull that one up. The green line is where we currently are. So this is measured from November. So the point in this is to say, look, if you measure Bitcoin's ROI from the market cycle peak as measured from November of 2021, it's doing the exact same thing basically that it did every other bear market. It's not different. I mean, the path to get to where we are is slightly different, but we're actually at the same ROI from peak that we were in the last two bear markets. And that's basically looking at an ROI of approximately 0.32. So about 67, 68% down from the all-time high is where we currently are. That's exactly where we were in the 2014 bear market at this time. It's exactly where we were in the 2018 bear market at the exact same time. Now, the argument that the bulls would point to, and I agree with the argument to some degree. I think it's a worthwhile argument to consider, and that's why I think being completely out of the market also doesn't really make a lot of sense in case that the bulls are right. And that's to say, well, look, if you measure it from April, you could say that we already had final capitulation. And instead, we've had diminishing losses in the same way that we get diminishing returns, right? So you would have, a 94% correction here. You would have an 87% correction here, an 84% correction here. And therefore, the argument would go, well, could this not just be a 74% correction? You get diminishing losses in the same way you get diminishing returns, and therefore the bottom could theoretically be in. So I think there's at least enough evidence to consider the bull case. In the same way that it's silly not to consider the worst case scenario, it's also silly not to consider the bull case, right? I mean, there is some evidence to suggest that the bulls could be right. And if you go to some of the other bottom indicators, like if you look at like the pi cycle bottom indicator, it says the bottom is in. Okay. If you go to the hash ribbons with price momentum, this one is actually flashed since we made that last video. So this one would say the bottom is in. If you look at things like the let me find one more. Like the regression band, it would also suggest that the bottom is relatively close to being in. The counterpoints to that, though, is that this needs to be refit every cycle, so it should be shifted down by maybe $2,000 to $3,000. And the other counterpoint would be to say, if you look at the 1 year running ROI on Bitcoin, it's currently coming in at 0.457. So what happens if we have to go down to 0.2, like what happened in the last two bear markets, right? Like after about 1 year. So the most likely time for that to occur would be this November, for the 1 year ROI to go down to about 0.2, right? So could we get there? Well, where would that put Bitcoin for us to see an 80% pull down from November? 80% would put it at around 13, 14K. So maybe between $13,000 to $14,000 would be where Bitcoin would need to be by November for us to see that 0.2 1 year running ROI. So in that sense, if we were to get another leg down out of this move, right, out of this 50%, this 50% move back up to the upside, right, if we had another leg down, that would then line up with the 1 year ROI hitting a major bottom at around 0.2. It would also make a lot of the final indicators flash. So for instance, the terminal price, the balance price, every bear market, we go below the balance price before the market cycle bottom is in. You can see it happen in 2011, it happened in 2015, it happened in 2018. It has not yet happened this cycle. It came close, but it didn't happen, right? Where's the balance price? It's currently at 16.47K. But remember, the price goes below that to mark market cycle bottoms. So that means, a 14K, 15K Bitcoin could theoretically be in the cards just to get to what would be considered a typical pullback in a bear market. I will remind you that even if the bottom is in, if you measure this out to the next peak, we still have likely a long way to go before the next mania phase, unless this follows this first, this crazy one over here, right? The 2013 run or something. But I think it's more likely that it doesn't just go up like that. But if you measure it again, if you go back to measuring it from November, you measure it to the bottom, it looks like we're basically right on the same track that we've been on in the past. All right, so I think it's something that's worthwhile to at least consider. Now, we talked about Bitcoin, and we talked about, well, what about the 200-week SMA, right? What's been doing? He spoke at length about Bitcoin, a date with destiny. Think about how many times I talked about Bitcoin having a date with destiny at the 200-week SMA. We talked about it. We even talked about it over here. We talked about it throughout here, that, one day Bitcoin will have its date with destiny, and destiny is in fact the 200-week moving average. Is the 200-week SMA not a historical good bottoming indicator for Bitcoin? I think it is. I think as long as you're buying Bitcoin below the 200-week SMA, it's hard to go wrong in the macro sense, especially if you have like a 3 to 4 year time frame. The counterpoint to that would be to say, well, what if, I'm just playing devil's advocate, right? What if you could say that the first bear market bottomed at the 100-week moving average, right? Like if you extended the 100-week, if it existed, it would probably come right around here, right? What if you say the first bear market bottomed at the 100-week? And what if you were to then say the second bear market bottomed at the 200-week, right? Then you could make the claim that perhaps the third bear market bottomed at the 300-week. I mean, guys, it's just dubious speculation, right? I don't think you should take it to the bank, but it is at least worthwhile to consider that if you were to extrapolate and say we're going to the 400-week this cycle, where would that put it? The 400-week, funnily enough, is at $13,000. That's moving up quickly. When 2022 started, the 400-week was at 10K. Now it's at 13K. If we have to go to it, by the time we get to it, it might be at 14K, right? It could be at 14K, which would correspond to being down about 80% or so from the all-time high. And that would be a pretty major, I think, a pretty important line in the sand. But there's something that we also should discuss, and we've talked about this a lot as well. And so far, this has not played out, right? I mean, it just simply has not yet played out. It might not play out, okay? I understand that I could be wrong about this, but it's the Bitcoin dominance, all right? One of the things to note is that when the Bitcoin dominance starts getting this low, it's not usually a good thing. It's not. It's just simply not. It happened in January 2018. That was not a good time for crypto. We know that the market pulled back a lot in January 2018 after the first 2 weeks. It then pulled back here. The Bitcoin dominance came back down in early 2018 in April. And what happened then? What happened in April 2018? We had a bounce, but then Bitcoin's price went down quickly. And that was when the dominance got back up to that level. Okay, so the Bitcoin dominance is back down to this same level. Look, if you draw a line across, you had sort of the major low. The major low, is this just going to be a higher low like it was over here? What's interesting is this corresponds to Ethereum's dominance going up. The Ethereum dominance, at the same time that Bitcoin's dominance went down, Ethereum's dominance was going up, and it topped out right around 20 to 21%. Right now, the Ethereum dominance is again at around 20 to 21%. Is this just a lower high? And it's starting to roll back over and go the other way, and to just complete the market cycle, right? It's something to consider. If you take the Bitcoin dominance and divide it by the Ethereum dominance, and you draw a line across, we're right where we were in that 2018 area before it started to shoot back up. Now the merge for Ethereum is coming up in a few weeks. Could we just be building up? Is there some hype around the Ethereum price? I say this, look, guys, I'm a huge Ethereum bull. I think that it is leaps and bounds above every other layer one out there. I do. I don't really think it has any major competitors. I have some other altcoins that I like, but I still think Ethereum is ahead of the other ones. But if I look at this chart, is there a chance that it's just getting rejected by the bull market support band again until we make it to the regression band, right? Like, could this happen as we go into the merge? There's a lot of hype around Ethereum, and then following the merge, that hype dies. The altcoin market drops a lot. Remember, the Bitcoin dominance went up here. But during that time, during June, July, August, September, Bitcoin wasn't doing anything. It was just going sideways. So you have to imagine, or I would have to imagine, that if something like that were to play out again, where if Bitcoin gets somewhat complacent, the altcoin market could dump a lot, the Bitcoin dominance could go back up. And you see this sort of playing out. You know, I do speculate here. A lot of times with these major coins, they oscillate. Okay, so perhaps it's just, you know, it kind of goes up, it comes down, it goes up. Maybe we're starting to sort of head back the other way now, and that's not going to happen until after the merge, or maybe slightly before it, but you know, sometime after September. One of the things we talked about before is that it's in September where the direction of dominance usually changes. Look at September 2020, right here. That was where the direction of the dominance changed. Look at September of 2021, right here. Early September, right here. That was where the dominance shot up in 2021. Let's go look at September of 2019. That was where the dominance changed again, but that time it went from going up to going down. September of 2018. What do you think happened? That was also an inflection point in the dominance, right? It was going up before that and then went down after it. So what you'll notice is that a lot of Septembers, the dominance changes direction. So whatever direction it was going beforehand, it then goes back the other way. So like in 2017, the dominance was going down. Then the following, you know, going into September, it shifted gears. So I think there's at least a decent chance here that following the merge, the dominance of Bitcoin goes back up. I certainly did not expect this move here, but perhaps I should have, considering that we also saw the same move back in 2018. If it plays out the same way and we see the dominance sort of curl back up and then go back this way, then that could play into the idea that the entire asset class goes down, even though Bitcoin might not have to go down nearly as much. So I think there's a scenario where Bitcoin is much closer to a major bottom than potentially the altcoin market. All right. Now, continuing on, I do think that it's important to look at the entire asset class as a whole. And we talked about, well, the worst case scenario is probably between like, I don't know, 400 to 600 billion or so. If it ends up being 500 billion, does that make sense? Well, if you look at the lower bound on the entire market cap trend line, it's right around 500 billion. And history shows us that we usually make it there eventually, right? So it's right around 500 billion. It could be 600 billion by the end of this year. Right? If it were to sort of come down into that, it would be around 600 billion. So there's a possibility that it plays out and still stays well within the bounds of this chart. Now, there are a few other things that I wanted to talk about. I mean, we've talked about some of the bottoming indicators and where Bitcoin currently is and where the entire asset class currently is. But there usually is a narrative to accompany bear markets, right? Like there's something that we point to say, well, this is the reason. Clearly, this bear market, you know, arguably the main issue has been, in fact, inflation. And inflation is still coming in at around 8.5%. We'll see where it comes in over the next several months. But I think one of the reasons that markets have rallied recently is because a lot of people are sort of thinking that the Fed's going to pivot because inflation year over year has peaked. And there is a decent chance that inflation has peaked, right? And if it has peaked and it starts to come down quickly, then the Fed might pivot sooner than people then that maybe they'll pivot when a lot of market participants think they will, and that's why the traditional markets have rallied and crypto has rallied recently. But what if inflation is not peaked? Or what if inflation stays elevated? A member of the Fed today said that they're not likely going to start cutting rates. I think a lot of people assume that once the rate hikes stop, they'll immediately start going back down. But if inflation just stays elevated, then they might not start going down immediately. Clearly, there's a lot of things that make up inflation. I mean, it's not just things like oil and gas. It's also real estate and food. I mean, there's just so many different things that go into inflation and what the Fed's interested in. But one of the main things is oil. And one of the interesting things is that oil has seen a pretty massive pullback over the last couple of months, right? And it's all the way down back to 92, right? 92. So it's still pretty low compared to where it was back in June. Obviously, if you fill up your car with gas, you'll have noticed that the prices have gone down recently. Arguably, one of the reasons the prices have gone down is because in the U.S. Strategic Petroleum Reserve, it's being depleted right now to basically suppress the price of oil, to basically keep it down so that it doesn't cost so much to fill up your car with gas. You can see it's going down relatively quickly because they're trying to offset, I think, the demand with some lackluster supply. I guess the question is what happens if they stop doing this and they just simply can't afford to do it anymore? Is oil going to break back out to the upside, or is this the beginning of the breakout of oil back up to the upside because of this? Because this is just going down like crazy. What's going to happen when we stop, releasing oil? Will the oil price start to shoot back up? And if it does, could that renew inflation fears? Okay, so I think if inflation fears are renewed, which they shouldn't have, they really shouldn't have gone away considering we're still at 8.5%, right? But I think the idea is, well, if it's peaked, then that's a good thing. If oil starts to go back up as we go into the end of the year, then that could renew inflation fears. And then furthermore, the dollar has been on a rampage, and we know historically that when the dollar's going up, it's not a good sign for crypto. So I think there are some people that are looking at this and thinking like it might be a double top. They could be right? Like, I don't know. They could be right. But if they're not, and it continues to rally on up, you should expect more than likely that it's going to put some downward pressure on risk assets like the stock market and cryptocurrency. So I think that would be the narrative. The narrative for, say, altcoins could just be, coming regulations and whatnot. That could lead to the Bitcoin dominance going higher as well. But that's more or less how I see the market right now in terms of a worst case scenario. Remember, a worst case scenario does not have to play out, okay? There are plenty of indicators that would suggest that the bottom for Bitcoin is already in. However, there's also a lot of indicators that say the bottom is not in yet and that we need one more leg down. The tricky part is if we follow the dotcom crash and we get, let's say we had the 40% move, the 50% move, we're currently in the 50% move potentially, right? Sorry, this should be the 50% move right here. And then this one would be like a 60% move if it follows the dot-com bubble, which would be a fake out, right? But if we're in this 50% move back up to the upside before another crash to a lower low, the difficult part would be, let's assume this happens at the end of the year or over the next 2 to 3 months, let's say over the next like 2 to 4 months, then there's going to be a lot of people that assume this is the bottom. And it would be hard for me to assume it's not the bottom, right? Or no, it would be hard. I would be naturally inclined to say, look, based on every indicator, this will be the bottom. If you go look at some of the bottoming indicators, the 1-year ROI, it would be flashing a bottom, right? The balance price, we'd be below the balance price if that were to happen, okay? There would be a lot of reasons to assume it's the bottom. So then the hard part will be after that, right? Right now I think it's just kind of like whatever. Maybe like some people think the bottom and some people don't. If we go down, we put in another major bottom at the end of the year, a lot of people are going to think it's the bottom. And as I said, I will likely be inclined to think it's the bottom as well, because essentially every indicator that we have will say, look, it's the bottom. But could there be one more shakeout, just like there was with the dot-com bubble, where you had like a 40% move and a 50% move and then a 60% move? Man, think about how difficult that would be if we went down the end of the year, we had a bounce to the tune of 60% off the bottom. And I bet you a lot of people would assume this is the bottom, including, probably including myself. And then if it weren't the bottom and we had another drop all the way down to say like 400 to 500 billion, that would be pretty brutal. That would be pretty brutal for the asset class. And then you're talking about, about maybe recovering out of that. Does that make sense from a bear market perspective? Well, interestingly enough, remember this bear market was like 2 years, a little over 2 years. If you assume this is the peak, right? April of 2021, May of 2021, that'd be about a 2-year bear market, right? That'd be about the same thing. So this is something to consider. It's the worst case scenario. I have no idea if it's going to play out or not, but it's something that everyone, I think, should consider when navigating the cryptoverse. I think a lot of people have been burned in the past. You need to learn your lesson if you haven't already and understand the downside risk with cryptocurrency. If we do see another leg down, it's going to take a lot of people by surprise, and then that would be sort of where I think a lot of people would assume the bottom is. If we get another leg down after that, I imagine all enthusiasm in crypto will have been lost. But it's funny because history would tell us that there's a more convincing reason to assume that would be the bottom if these don't actually turn out to be the case. If you guys like the content, make sure you subscribe, give the video a thumbs up. I know it's been a long video, but I hope it's been useful. We'll continue to provide updates on the asset class as we continue to push forward through time. And we do have Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.